G'day traders, Greg McKenna here. Welcome to Markets Morning. It is the 12th of December 2018. Just a quick announcement. Today's launch day for my paid subscription service. From next week, everything will be going to subscribers only, so that these videos will be private, and I will send links to subscribers. So keep that in mind. If you value what I do, feel free to subscribe. If not, well, thanks for watching up until now. Today, what I want to talk about is the structure of markets and what you see when you get the kind of price action that we saw in the S&P 500 last night, and what we're increasingly seeing every time the euro tries to rally or sterling tries to rally, or even the Aussie and the Kiwi try to rally. These are markets that are telling us something. Just quickly around the grounds last night, the S&P 500 finished at 2636, which is about 12 points off the low, but the high was 2674. So a bit of a failure there of the bulls, as it couldn't sustain. Now, of course, the argument is whether or not it was Donald Trump and his little tantrum that he threw in the Oval Office about the wall and the government shutdown and all that kind of things, or whether it is just so obvious that the administration is trying to get out positive stories about China and about this trade truce that the market is immune to them. I'm not really sure. Pardon me, you'll probably see me drink coffee a few times. I've got this wisdom tooth thing happening at the back of my head on the right-hand side at the moment, and it's not a lot of fun. Also, we're getting some work done, so hopefully, I've tested it. Hopefully you can't hear the jackhammer out the front. If you can, I do apologise. I'm trying to speak directly into the microphone so that it overcomes any of that noise. Anyway, so, you know, the trade truce, we're moving forward, but the fact that the Chinese representative didn't come and only spoke on the telephone kind of gets people a little bit worried. Then news, of course, that this Canadian ex-diplomat slash businessman has been arrested in China, and then chatter, you know, I don't know if it's true or not, that the Americans are saying, heck, maybe you shouldn't, you know, travel to China just at the moment, those kind of things, along with the, what would you call it? You know, the Canadian kerfuffle about the Huawei CFO and bail and all that kind of stuff, the court case is ongoing. You know, it's a bit fractured at the moment. I don't think we can conflate the two. You know, if we're going to conflate the Huawei thing with trade, then we should conflate the China Sea thing with trade. And, you know, diplomacy is a complex, you know, kind of activity. And so these are multi-level and multi-layered. If they do get merged, then that is seriously concerning. But let's look at the price action. In terms of foreign exchange, the US dollar has got its mojo back. It hasn't closed above 97.70 in DXY terms, but gee whiz, it's close. 97.48. Now, of course, a big chunk of that is driven by the collapse of sterling, which then dragged down euro and helped dollar-yen pop up. But that's something to watch. If we get a close on a day, or heaven help us, on a week, above 97.70, then get out of the way, because we are going to see it roar. Now, haven't changed my position since yesterday, but exercised yesterday, did it again on sterling, thought, got to see a retest of the break, saw the retest and I didn't have a level in. Anyway, stupid. I've been so occupied with this launch and all that kind of stuff. Get back to normal soon. Anyway, let's talk about the price action. The bears got chased away. The bulls got chased away. Where are we today? We are nowhere. That is the reality. We are still inside the range on a close basis, which is probably the most important thing to know. Peter L. Brandt did send out a little tweet this morning, which I've included in the written piece of Markets Morning, where he said, is this a big bear trap? It could be, but that close almost negates it. Not quite, but almost negates it. You know me, you know, Pete Brandt is a brilliant chartist with a fantastic track record. He charts in a classical approach based on Edwards and McGee and Schumacher. Me, I chart in a Greg McKenna approach, which is built very much on Bill Williams, my own stuff I learnt from Graham when I used to sit opposite him at State Super. You know, reading Edwards and McGee, reading Murphy, reading candlestick books, putting it all together, listening, of course, to Jimmy Roebuck speak to Michael Covell back in 2012, and then applying all those things. But for me, the range is held unless or until it closes below that 25.95 level. So that for me is the key here. In terms of the price action though, that is not very good price action. We'll have to see what happens. Now CPI is out tonight. It's not expected to be too high, but if it does actually, just excuse me showing you the side of my head. I've just had a mental blank as to what the actual number is supposed to be, and I'll just bring it up here over on this screen. Where is it? It's GDP tomorrow. I can't see it. Bugger. Where is it? American flag. Existing home sales. 19th of December. That's next week. Sorry, folks. I have no idea what's going on here. What do we got? What do we got? What do we got? What do we got? We will get there in a sec. What is today? Today's the 12th. Well, that blow me down. It doesn't have CPI on there. I must have unticked the box. Anyway, I'll bring it up in a sec. So watch CPI tonight. It's going to be big. PPI last night was slightly higher than expected. It was 0.1 instead of 0. Big deal, 0.1. The core was 0.3. The reason I want to talk about CPI and PPI is because if you have to look at, if you have to think about what the Fed's going to do next week. So there's two things here. I know I'm a bit muddled today. I've got this ringing of the jackhammer in my head. It's kind of really, and the tooth thing. Jackhammer and teeth together, folks, not good, not a good combination. So I do apologise. Let me try and settle down for a sec. Right. The key point, and I think it is the key point in Markets Morning today, the written piece. The key point is that wages in the UK last night are at a 10-year high. Unemployment is at generational lows, 4.1%. Wages in the US, as shown by non-farms last week, are at 9.5-year highs. We are at generational lows in the unemployment rate in the US right here and right now. What does that all mean? Well, it means to me that there's a potential for the Fed to be less dovish than the market is now thinking. Yes, it will signal a pause. I believe that. That would be the right thing to do. That is what the RBA has done for decades. That is how we are almost, we've got a floating currency, of course, but that is how, and we've got China, but that is how the RBA conducts policy such that we've had almost 3 decades without a recession here in Australia. It's natural they're going to pause, but I think the dot plots are still going to show more rate hikes. And that is not what the market is pricing for. So that's your first thing. That could hurt stocks. But that's the key for me. That's where we could end up seeing this break. It's also important for the US dollar, of course, as well. I'll just quickly go through the rest of the stocks. The Dow, similar story, of course. Different construction, but similar story. The Nasdaq actually finished positive last night. Everything's moved around, which means I've lost the chart. So the Nasdaq had a big chase back as well. So just on a candle by candle basis, you've seen 3 indexes there where the bulls lost. The bulls were chased back. New Zealand CAD's there, right? Aussie market, inside day, doesn't mean a thing. If you just look at 2 candles, Joe Ross, back in the early days when I was a young fellow, I'd been trading for a while. I went to JB Weir because I wanted to come back to Sydney. I was working on their money market desk of what became JB Weir Capital Markets. And Joe Ross, 2 candles was all you needed with Joe Ross. 2 candles, volume and the last 2 candles. I look at that, I see a big black candle and I see an inside day. What does that tell me? That tells me I'm not doing anything until it breaks outside either side of that candle, then I'm going to run with it. In terms of the DAX, we have... it still needs to break up. We've got that gap there. Basically, it's got to get back above 11,000. It will get there if the US gets there. Just quickly on the Aussie market, have a look at... I'll go to currencies now. Have a look at the Markets Morning written piece, and you'll just see how poorly and materially the underperformance of the local market and the DAX and other markets, but in terms of this chart, the local market has been. Where are we with Euro? Right, so I've zoomed in here because normally I don't zoom in like this because I can't make any sense of it, but I think you can here. Basically 113. Now, the line is actually 113.12 or 10 or something like that. 113 gives way. Where's the stop and reverse? Right, that's 1286. But if 113 gives way, then I'm looking for lower levels. You can see here, that's just a clear downtrend when you think about it, isn't it? Right? So if that breaks, then I'll be looking for that fractal there, which is, well, the 113.10 is effectively the break. And then we'll be looking for a little run down to 112 in 112.60, 70, and then we'll see. That would, if it gets there, the dollar index is going to be very close to breaking out through that 97.70. So keep an eye on that. Dollar yen is roaring. You know, I'm still short euro. I got out of my short dollar yen last week because it just didn't perform. It's one of those things when you've got a position that doesn't perform. You know, you look at it, you have an expectation. What is it Peter Rob Brandt says? Strong convictions weakly held. I think I've said that before, which means that when the position doesn't work or you get stopped out, well, then you're stopped out. Then you wait for the next one. But the key here for this is that it just kept finding support, and now it looks biased high. Now, we've got a little downtrend line there. I'll just draw that in for you now. Hopefully, I'm not too loud because I'm trying to lean into the speaker. Maybe I'll just talk a bit slower. Right. So 113.70 is the level. If it can get up and through 113.70, that would be a good run. I'll get the skates on because we're already 11 minutes in. Sterling is a shot duck. Greg McKenna is a bit of a dope because look at this. Look at the, honestly, folks, this is exactly what you want to see when you see a range break. You see the break, it comes back to retest it, and then it gets slammed or it gets bought, depending on whether it's a downside break or a topside break. That's exactly what you want to see. This means 124. All right, let me see if I can shrink that up and you can see it. Now, you can't see it. You're going to have to go to the weeklies. Right, so 120 is the 138.2. But, and it'll make everything too messy. But if I was to put one from there to there, then your next target is low 124. So we're almost there. If that breaks, then we seriously are talking about lower. But just on a weekly basis, we're talking about the 120s. Now, what's going on with Brexit? The Poms have screwed it up. They thought they had hand. They've negotiated poorly. They've been bad faith negotiators. They always want to come back to the table. You know, please, sir, can I have another? Please, sir, can I have another? Please, sir, can I have another? It's like negotiating with your kids. But. And if I was Donald Tusk basically said, what else can we do? Now, there are lots of things that Europe could do. But if you reopen negotiations, what are the French going to do? What are the Spanish going to do? What are the poor old Irish going to do? That's where the fulcrum is. That border in Ireland. Some of my friends who are Irish and now live in Australia, and my uncle, who is Irish, you know, they're deeply worried about what that border's going to do. I wish there could be another way, but, you know, this is also why options, you know, my calls look like rubbish, don't they? But, you know, their calls into next year, and maybe we'll get the second referendum, and I guarantee the second referendum will not vote to leave Britain, because all the youngsters won't be sat on their backsides worried about the weather. They'll get out and vote. So anyway, for the moment, the chart suggests 124 low at least, and if that gives way, then we're talking about 120. Now, for the Aussie, what do we got? So we still haven't taken out 71.60. Right? We're not in much of a range, really. You know, we're trapped between the 50 effectively and the 30. Now, that's pretty boring. So nothing to see here move along. In a structural sense or a longer term sense, you've had this bearish engulfing and we're at the bottom side of the bearish engulfing. That suggests to me that we're still going lower. But 71.60 is the key. Dollar CAD, it still hasn't taken out last week's high. Oil did really well this morning. The draw on the API data was huge. Now, last week there was a 7 million draw on the EIA data, which is out tonight. Nobody paid attention to that because we didn't know what OPEC was going to do, and it didn't look at that time whether or not OPEC was actually going to be able to get a deal together. You know, they tried to stage manage it. They failed, obviously, but they tried to stage manage it. Oh, no, maybe we haven't got a deal, and then they were thinking that they were going to deliver. But if the correlation between the CAD and the crude oil price, CLC1, which is WTI, is pretty high, and it's in about the 80s or something like that. And so there's a certain, let me just tell you what the, so this thing here, this weekly, plus a video, is part of the platinum package. Now, it's more expensive, but you get this. You get, seriously, 8 hours work. It just keeps you in the money. So it's dropped down to 75 as at last week. It's normally been in the high 80s. So oil has not had as an important a driver. Now that's because people are recalibrating what the Bank of Canada is doing. I think they'll recalibrate what the ECB is going to do as well. Last night, Germany downgraded its outlook for growth to 1.5 to 1.6, which means they're actually thinking it's lower, to me, behaviourally. Anyway, from a dollar CAD point of view, the improvement in oil has capped that. But if the US dollar breaks out, expect the CAD to go with it. It's one of my bellwethers. Kiwi, bit of a long tail, but similar to the Aussie, constrained. It needs to break this trend line, 68.30, to get going down and further. Dollar yuan in CNH terms, broken higher but stalled. It's not going to bounce very strongly unless trade breaks down, but it's not also going to fall very sharply unless the truce is proved to be real. And to me, you know, I don't think it's going to be till the 90 days, or unless there's a deal done inside the 90 days. Dollar Sing, last 3 days, highs in the same spot. Keep an eye on that. If it breaks, it can run, and it could run if the US dollar gets its mojo back. But just at the moment, telling us that not yet. Gold looks, unfortunately, like it needs a little bit of a run lower. We can't get through this 50, and now we have a fractal at the high from the other day, which is, pick that up please. All right, I'll do it this way. I've got the, come on. 1250, right? So 1255, 56, 57 is your 200-day moving average. As I say, this is probably the only asset on the planet where I actually pay attention. There's much money to be made if you want to do it in a stocks point of view. Larry Tintorelli, I think I mentioned that yesterday. But this looks to me like it needs to come back to 12, sort of 34, 35 to get going. Silver, still in a range. Nothing to see here unless you're at either extent. But we did have a bit of a long tail, even though that wasn't that big. Copper, really interesting. Bouncing off the bottom of this wedge. This is a great wedge. You know, back in 2015, I think it was, copper just bottomed on a trend line that went all the way back to around 2000 or the early 2000s, and that's the sense that you get with copper, that it's a financial asset. Yes, it's used. It's a commodity. A real commodity, you know the word I'm looking for, industrial commodity, that's what I'm talking about. But it's also a financial commodity, and to that extent, it does trade really nicely. So keep an eye on that one. A break lower would be instructive. WTI, China base, low confidence here, to be honest with you. Low confidence trade, but the trade is still on, still trying to bottom, but, you know, it's looking tenuous. If it takes out the lows, pardon me, then you've got $5 to $10 on the chart, and then we'll be looking for the next move as the big move, pardon me, and indicator of the lows. Similar story for Brent. Naturally, Libya outage is helping, but we just got to wait and see. The EIA upgraded forecasts for both supply and demand last night, which kind of hurts the price to a certain extent. We're getting a little range. If you go down on the 4 hours, you might be able to see a diamond there, and then you go with either side of the break of the diamond. But for me, as long as it holds above the low on a day close basis, then it's still bottoming. If it closes below that, then all bets are off. Last but not least, Bitcoin still struggling. It's still, you know, it's been up and down and around 3,400, depending on where you get your prices. So it still looks like it's under pressure. Soybeans, don't believe the rhetoric, but they are more positive. So they've moved to a tighter but new range, which tells you that they do believe that 5 to 8 million bushel purchase might be coming. But if they take out this high there, 930, then you'll know, so call it 932, then you'll know that there's more positivity coming about this China trade truce, and it might be a good lead indicator for other things like stocks or like currencies. Righto, so that's it from me. Subscribe. We go behind the paywall from next Monday. I want to keep doing this for you, but that's it from me. I'll be back tomorrow. Bye for now.